Hey, it is 10 o'clock and I want to go ahead and get started. Welcome to 2024. It is the first one of the year, January, and I'm so excited to be here. My name is Heather Ryan. I am the tax queen, if you are not familiar with me, and I support digital nomads, RVers with taxes and business finances. And I give you this opportunity the first Tuesday of every month to ask questions and get them answered live. And you are welcome to watch the replay as well. So, should we go ahead and jump in? If you want to, if you're here live, feel free to give me a thumbs up or something just so I can know that you can hear me and all that good stuff. Otherwise, I'm going to jump in and get started with the questions. I have a few questions this month, which I'm pretty excited about, and I'm excited to share that. So, let's see. Question one, and I'm sorry if I'm not always looking right at the camera. I do keep the questions on a separate screen just so I can manage all of this. And let's see. Question one. Also, just one more thing, if you're here live, feel free to chime in with questions, especially once I've finished answering the ones that were already submitted, because I'm happy to stay on a little bit longer and answer those questions. I've been contributing to a Roth IRA, but I'm curious about investing additional savings in a SEP IRA. If it's not a Roth, does the SEP IRA qualify as a traditional IRA? So let me just kind of define here, because this person obviously has some knowledge, right? And not everyone has all of that. So these are retirement accounts, and the Roth IRA, many people have heard of. A traditional IRA, many people have heard of. IRA, if you're not familiar, it stands for Individual Retirement Account. A SEP IRA actually stands for a simplified employee pension, and it is for those who are self-employed. Typically, businesses can offer them as well, but typically I see it for my self-employed taxpayers. And the SEP IRA, if you are a sole proprietor or a partnership, you are allowed to contribute 20%, up to 20% of the net profit from your business into a SEP IRA. And it has a maximum, it keeps changing. It's like at 66,000 or something for 2023. 2024, that jumps to 69,000. I mean, it's pretty high. I don't see too many people maxing that out, but you certainly can max out based on your income. And so that's definitely possible. Again, 20% if you're Schedule C sole proprietor. And as far as, so a SEP and a Roth are completely different things. And a SEP IRA is not the same as a traditional IRA. So a Roth IRA and traditional IRA for contributions in 2023, I know we're at 2024, but we're still dealing with 2023 taxes. So they're at 6,500. If you're under 50, if you're over 50, you do get a catch-up contribution. And then the SEP IRA, again, is at that 66,000. It's very high. So just be aware of that. And then with no employees and you earn below the income cap. So there is an income cap. It's an income limit if you want to contribute to the Roth IRA. And that's fine. The SEP has nothing to do with the Roth contributions and an income limit. The income limit is based off of the business income. So hope that's clear in the comments. An article that kind of goes over some of the investment opportunities. So it's going to talk about the Roth, it's going to talk about the SEP, and there's actually a third one, a 401k. And that leads us to the next question. So the next question is all about a S Corp, and I am going to summarize it because this was a very long comment or question here, and I'm going to summarize it. So this person was basically asking about a S Corp and having a solo or individual 401k. and its contributions as far as like limitations and how you deduct it and all of that fun stuff. So I'm here to tell you a solo or individual 401k is available for those who are self-employed. So you can be a Schedule C sole proprietor. You can also be an S corp, and you could be a partnership. The only thing is that it has to be with just you alone, which obviously doesn't qualify as a partnership, or just you and a spouse or a partner as a partner, right? They're the only two people that are employed, whether that is actual employee as in the S corp or a partnership or owners, of a Schedule C sole proprietor. So there are two parts to a 401k. If anyone is familiar and has had a 401k through a separate W-2 job, you are familiar with, you have like a salary deferral. That's what we call it. So this is your employee contribution. And this in 2023 is 22,500. In 2024, this goes up to 23,000, and you get a higher limit if you're over 50. That jumps. So you get a bonus extra contribution. The second contribution part of this is your employer. So remember, you're self-employed. You're acting as the owner of the business, right? You're the employer and the employee. So you get two different contributions. And particularly when you're an S corp, this is important because it is 25% of your W-2 salary as an S corp owner or shareholder that you can contribute to a solo or individual 401k. So that is the max that the company can contribute, right? So you have your salary deferral, which we said is 22,500 in 2023, max or 23,000 in 2024, and then 25% of your W-2. So you have two separate contributions. And I'm trying to see what other questions were on here that I'm trying to raise. So the salary deferral, when you look at your W-2, is going to reduce box one. So that's your income. So it's going to reduce it dollar for dollar, however much you contributed. If you maxed it out, that's 22,500. Again, if you're over 50, contributions are higher, and these limits keep changing. Every year they do tend to go up. So let me see what else. The other thing I wanted to mention here is that if you have another job that you're contributing to a 401k, right, another W-2 job, you work for someone else, you are maxed at that 22,500 or 23,000 if you're talking about 2024 total employee contributions. You cannot double dip for yourself and someone else. You could still make employer contributions, that's fine, but you cannot do the salary deferral part on your own S Corp W-2 income. I hope that's clear. If you have questions about that, please reach out or just leave a comment here and I will try to answer them live. This is a little bit more maybe, yeah, it is kind of complicated and they're deducted in different places on tax returns, right? Because your S Corp does file a separate tax return. So just be careful of all that. So yeah. And this one also might help you if you are struggling with retirement options as for deductions and you want to make them throughout the year. All right, lots of retirement. I like it. Retirement contributions are a great way to reduce taxes. Obviously not for Roth contributions, but everything else. So question 3, we are getting an RV built and plan on living it part-time. I'm contracted employee. Like to know which tax deductions I can claim while working on the road. So I am not sure what that term or this person means by a contracted employee. So if you're a contract worker receiving 1099 income, you have a business. You are not an employee. So I'm not really sure if this person is on, feel free to clarify, but a contract employee is not a thing. So if you're a contract worker, you own a business and you can take deductions. It would be running a business, right? Is anything similar to you regularly running a business, right? You get your insurance, you get your office supplies, anything you need to do the work, your software, phone, if you need, to make calls to clients or customers, um, anything else industry specific. If you have merchant costs, right? Using PayPal or Stripe to collect payments, anything like that. So it's your typical. So just being on the road doesn't make it deductible. I would need more specifics really to give you more specifics, but in general, just because you're on the road, it's a lifestyle choice. It doesn't make all of your travels deductible. You're doing it personally, not for business most of the time. That's what I see. If you are an exception and you are strictly doing this for work, feel free to reach out or clarify if you're on here live. Let's see. Question 4. We have owner financed a business sale 2 years ago. There was an initial down payment and then monthly note payments. At the completion of the payment period, there will be a large balance paid in a lump sum. Is the lump sum available for a 1031 exchange? Okay, so before I even go on, there's a few more lines here to this question. A 1031 exchange is a like kind exchange. So exchanging property A for property B. Property B has to be of equal or greater value, right? So if you have an investment property, which could be a business, it could be real estate, anything like that, and you want to upsize it or go to the next thing, you can do that with a 1031 exchange, and it's tax free, so you won't pay the capital gains on the sale from asset A, right? So you're selling asset A, you're buying asset B. If you do a 1031 exchange, you do not pay capital gains on asset A, the sale. You're just carrying it over to now that's asset B. So you can keep doing that for however many years you want to avoid capital gains tax with each purchase, right? As you go up, eventually, if you do sell that, asset B, you might have capital gains unless you do another 1031 exchange. So in this case, one other thing, 1031 exchange must happen. Very, very strict rules. So I don't typically deal with this. There are actual people that deal specifically with 1031 exchange because it has very strict time regulations. And so in your case, if this business sale happened 2 years ago, you have missed your window of doing a 1031 exchange, and there is no possibility. That's not on the table. So it's very, very strict. I think you have to identify the property within 45 days, the new property that you want to buy, and you have to complete that sale within 6 months. So it's very strict. And you need that outside person because they handle all the money. So you never touch the money in the sale and buy of a new property. So yes, you have missed your window of 1031 exchange on a business sale from 2 years ago. Let's see. I think that answers most of the questions. And my consultant client requested to prepay me a large sum of money. For time, I'll be working with them next year. I accepted because I wasn't sure the tax implications. So this question was just received yesterday. So I'm hoping, I don't know. When you're a cash-based business, you have to report all of your income the year that you receive it. So if this happened, let's say December 30th, and you were accepted with 10,000 or 20,000 or I don't know, whatever, $50,000 prepayment, you're going to be taxed on that the year you received it. So if that was December 30th of 2023, that's the year you're going to pay taxes. My chances are that your business that you're working with wanted the deduction. So they wanted to be able to take the expense in that year because they had high income or higher than they anticipated or something. So their tax person or someone advised them to prepay. Unfortunately, that is not in your favor because you are going to pay tax on that in the year you received it. So I hope that makes sense. Most of my small business clients are cash-based businesses. It's just when you receive the money is when it's, accounted for on the books. And that's how we look at it. as far as paying taxes. So that could be definitely not in your favor. So things like that come up, definitely reach out to me before they happen. Um, and I'm happy to answer questions like that. All right. So do I have any other questions live? I do see a couple of you here live, and I would love to answer any other questions. Those are all the questions I got prior to today, and I hope I gave some clear answers. But please drop a line in here if you do have a question now. I do have some more time. I'm happy to devote. And if not, if you think of something later, I'm leaving this link and feel free to drop it in there as well for the next Text Tuesday. And I will just refresh your memory. The next Text Tuesday is February 6th at 10 a.m. Mountain Time. Again, it's always the first Tuesday of the month at 10 a.m. So I am here to answer your questions live. If I get them previously, perfect. I will go through them. Anyone here who's live have a question for me? Otherwise, I'm going to call it a day. And I wish you a great 2024. And maybe I'll see you out there on the road. And otherwise, have a great Tuesday.